Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 19th, 2021. In this video, I'm not doing a market wrap because there are no new changes. I did a midday update, and we're pretty much about where we were then. So, no change in the market. But as I promised and always do, if I can come up with any more trade ideas, particularly individual stocks or sectors, I'll get those out to you guys. So just shortly before the close today, I had a price alert trigger, an old price alert I had set from a while ago, and it made me look at a sector. And so I think I found another some trading ops here with a lot of potential. Whether you want to trade actually, take that back. There used to be a sector ETF, coal, KOL, and I'm pretty sure it went to the wayside, and I don't believe there's another coal ETF out there. So that's what I'm talking about here, coal stocks. If you've been with the site for a while, you'll recall back in 2020, around about this time last year, actually, I became very bullish on the sector, and this started posting numerous updates, almost near daily basis. Coal sector trade ideas starting. That was back early. We hit them. Actually, we hit them big for triple-digit gains back then in 2016. But here in 2020, starting at the end of August, that's where I really picked these up on the radar, and they were my top picks for a while. Again, this sector, I don't engage it often, but when it starts to set up for a big move on the upside or downside, that's when I'd like to focus on it. And as I said back then, the nice thing about these guys, although they're very aggressive, you got to give them room. Don't go too big on your position sizes, too heavy in your portfolio, but they're not your typical 5, 10, 15, 20% profit potential trades. These gains are usually measured in the triple digits. So and you can again go back and see all the analysis stack then leading up to right about the election, and that's when I did the last update. I started getting bullish also on the gas and gas and oil stocks just before the elections. Highlighted that as the my favorite sector in the S&P 500 of all 11 sectors, energy, and they exploded after that was right after the elections. And so what we're going to do is take a look because we've come full circle. Those moves have played out and then some. I'm going to start out with BTU because that's the one I had a price alert on today. Let me cue up that chart. It won't be a long video because there's not too many. There's only a handful of coal stocks left, and as I said back then, I was focused on primarily the domestic coal companies. There's other companies in China and Australia and elsewhere, but all right, so we're going to start here because this is the one I had the alert on today. BTU, that's Peabody Energy. Let me show you a chart from that video. This was just before the elections in November, and that was actually, I believe, the last update I did on it. And here's a screenshot of that chart. And when I got to the coal stocks at the end of the video, I think that was sometime, early November. I mentioned all the overhead levels are potential targets, and I don't know if you can make that out there. First target I said was, minimum target I had on it was 100% return because we were at $1.22 and I was calling it up at least to 252 on a breakout above this downtrend line with a max target at 867. So that was then. This is now. The stock went up to exceed that 867 target from the breakout point, which occurred just less than a week after that video. There was a breakout right after the elections. This sucker rallied about, there it is, almost 1,200%. So that was actually a four-digit returner instead of a three-digit, and overshot the 867. But again, the whole point of this video is we've come full circle. So the move that I was looking for and then some has played out in these stocks, and I believe we've come full circle. The reason I was bullish on those, I started becoming bullish back here, as I showed you in those the screenshot from the site or those posts, and most of those did bottom in that August-September range right here, and BTU actually took one last thrust down and then went on to break out above the trend line, and so that was the move. And you can see the same reasoning. There's quite often more that goes into my analysis than just these divergences, but that's a big part of it. I look for the divergent lows and highs, also other factors and things on the charts, as well as fundamentals. And it's no secret right now that I've been quite longer term bearish on crude. I believe that we put in a major top just a few weeks back, and only time will tell if I'm right or not on that. There was certainly a major bottom in these coal stocks, and here it is. This is a just a beautiful bearish rising wedge pattern. Just like you had the bullish or positive divergences leading into that low back there, you have now negative divergences, and you can see I didn't throw it out. Well, I got the alert shortly before the close. We just spiked down through there. So it's still a setup. What you want to do, basically, I think what'll do the trick is a break below today's lows, especially a close below today's low. That was 1135, because that will take us below this nice clean up trend line, rising wedge. And as I do this, I didn't want to mess with these charts too much. The only thing I've updated is some of the divergences and maybe extended the trend lines. And I'll try to give you some rough targets in the video, and then I will sharpen my pencil after the video, go into these charts and maybe refine those and give you more targets. But there's a minimum target pending a sell signal again, break of the trend line, and that would be the 954 level right there, and that would be roughly about an 18% drop. So don't be fooled by just appearance. It doesn't look like much of a move when you look at the scale of this chart. But remember, here's a stock that went from about 70 cents up to $14. So I'm using log scaling, so that is a big drop. Again, 18% is a minimum target. Again, these were old targets on the way up, so now what I'm doing is I'm revising these and adding new targets. Second target there, 691, again unadjusted. And then my current maximum target right here, 523. So I'm going to change these lines up. I won't do this on each and every chart because the video will take too long. I'm just going to tell you right now to get them out to you in case I don't follow up, in case they start to move tomorrow, let's say, and I don't have time to get all the targets out to you. And you should always have an idea of what you're targeting if you take a trade in order to determine your stops. Because if you're shooting for the the big move down to 523, you can allow for a much wider stop. If you're only shooting for that drop to 1954, 18% drop, you probably want a stop loss around 6% or so, using a 3-to-1 risk-reward ratio. Okay, so there's one called a trade setup, and what I like to see in a sector, as I did back here again, heading into the middle, summer of 2020, is not one, but I like to see nearly all the stocks in a sector confirm with a bullish technical posture. And the trend was bearish, clearly. One thing I don't have to tell you, if you've followed me for a while, I like to catch tops or bottoms, and in doing that, you're going to get cut. Sometimes you're going to call a top on the market or something else, or a bottom, and the trend continues on. However, when you can get those inflection points, when you can get in, the profit potential is huge, and like anything else, you just, if you're going to short these, don't fall in love, use stops. But I can tell you, this is a very nice setup right here. That is big resistance. Again, I have not modified this chart or these horizontal lines. These price, that was my max target on Arch back then. That's 69.07, and look at that. I mean, almost a perfect tag. Now, when I say almost perfect, if you look at this, that's a daily candle. That's what happened intraday. It was a momentum fueled overshoot, and we shot back down. These coal stocks, they moved. This one was down almost 6% today. So that's about as close as you come for a volatile security. They're going to overshoot support and resistance levels, but you can see all the reactions on that level right there, recently in rejection. And again, that was long-term. It was support at this point. Support, once broken, becomes resistance. This stock, since it bottomed back in 2020, has rallied 236%. You're overbought. You have negative divergence. You have everything you want to see. So the two objective short entries are right here. Now, we already had that. We could bounce back, and if we get it again, still objective short entry around 69. Or what my guess is, what we'll probably see from here, especially if crude oil continues lower, because crude oil obviously is a competing energy source for a lot of power plants will use it, and if they need to, they'll shift to coal. Some of those that still burn coal. And there's your next downside target. Yeah, I would still leave that target there. That was an upside target on the way up, 50.63. And look how many reactions. We had reactions there, quite a few reactions there, a little false breakout. See that? Little big candle, and they got rejected. big reversal back down, and once that breakout failed, it made another run at it, resistance, resistance, and then boom, broke out. Back tested about a week of back tests right there, another back test and moved up. So that is, to me, is a magnet for a price target where we're probably going to go at minimum if we break the trend line. Probably get a reaction there, but again, this is the tough part. You decide if you want to, hit a single, and hitting a single in these stocks, you're talking well into the double digits. That's about 16% to that. Or do you want to hit a triple or even a home run? At this point in time, my preferred swing target right here, 4103. That was, again, a level on the way up, and that's what I'll be looking at on the way down, and that would be about, if it is hit, drop from where we're at today, and of course you want to wait for the breakdown, about 31%. Next up, ARLP. Here you go. Nice. This was just a beautiful wedge pattern back then, highlighted with these divergences, and boom, breakout, impulsive, everything you want to see in the stock. Never look back from that breakout point. If I can grab the crosshairs, this guy rallied about 185%, and we're right there. We're still right off the highs right now. So whether these work out or not, I can say the train has certainly not left the station. We have just I think one of these that I'm about to cover. There's only about a dozen in here. One of them has clearly broken down. These rest are beautiful setups. They're waiting for a break of those levels. A lot of hot air, a lot of profits to be taken by those that got in here. I wish I could tell you I still held these. I don't. They kind of fell off my radar till I got that alert today. But we did make some really nice gains early on. Hit a lot of those targets. I need to give you a downside target, initial target at least, right here. Yep, that's a high probability target, 655 from where we're at now. Or from the trend line, if we break down, that would be about 11, almost an 11% drop, about that. And I'm going to put a additional target right here for you, 543, and then that was an upside target right at about $5. We'll just leave that one there, and let's just see. I'll follow up. If these don't break down, I'll drop off my radar. I may not cover or talk about them for another 2 months if they all bounce off support and then break down. And if they do, then we'll just reassess the charts at that time and see if we have any different targets. So that is ALRP, a trade setup, not an actionable trade. Need to break the trend line. Next one, HCC, not one of my favorites, but was back here last year, and there was a beautiful divergent low. Look at that thing, rallied about 164%, but it's kind of grinding around, so I'm going to move on. Again, not one of my favorites because I don't have clean trend lines. Or there is a pretty decent resistance level right here. I tell you that, you could short that, 1961. We're almost there now. I just don't have a really nice trend line that I can put under this one, or horizontal support to really trigger a short entry, other than I'm going to pull this line down now, change that. There's your price support, roughly about 1590. But so again, CEIX, Consol Energy, that one broke down. There it is. Look at that nice wedge right here. Big bearish rising wedge. That's your divergence. Well, this is your divergence right here at that point in the wedge. Negative divergence. Uptrend line. Broke down actually yesterday and followed through to the downside today, down about another 4.5%. And again, just so much hot air to go. This was a divergent low back here in November when it was highlighted. And from there, that stock rallied about 510%. And again, I think it's come full circle. I think it's time for these guys to go down, especially if the crude short trade continues to play out to the downside. First target right there, about 1617, and yeah, I'd say 1220 right there, target 2, and let's just call that for now the final target. Again, I'll have to go in here and kind of change these up a little, and I'll let you know if I make any revisions to this or any of these charts. AMR, Alpha, I don't remember covering. Yeah, I must have covered this one because I had trend lines and all that back there. You didn't have well, you did. You had divergence back then at that point earlier in the year. And then here was your breakout again, right around when I started focus on these guys. So I guess it was covered. And from the breakout point, that one rallied about 866%. Extreme overbought conditions. That in itself says the upside is probably limited at this point. Last time, well, we weren't even that overbought here or here. We were overbought, but not as high as that level. And you can see what happened there and there. I'll tell you what happened from that overbought reading. We dropped at that time around 37%, and I'm sure that was well into the double digits right there. So probably looking at some downside to, I would say, initial target, and it's right below the trend line, but I think we'll come down at least to right here. Again, I'll have to revise this a little bit. I'm going to pull this line down. There was a gap right there. I'll get back to you on this one. Let's just say, if you get in them and you get the sell signals, like crude oil, I think you can tuck these away for a little bit, because I'm not looking at these as very short-term swing trades, unless that's your thing, unless you want to get in them if they trigger these sell signals and then hit out, cover on those first support levels, and whether you decide to get back in after a bounce or not. The only thing is sometimes when you get a lot of hot air in these stocks, they can smash right through the first target levels. XXC, Sam, X-Ray, Charlie, Suncoke Energy. Oh, nice clean up trend line. Look at that. Boom. Right on it, as well as price support. I love these setups when you have both an uptrend line and then horizontal price support, because some eyes are watching that 650-ish level, other eyes are watching the trend line, and so if they both go, you have two different subset of traders willing to either short or stop out of their longs on a break of that support level. I haven't updated this chart yet, other than to pull up that trend line. I'm going to have to work on this, but I think this would probably be my first target there, about 560 or so, with a second target. And at this point in time, let's just say final target zone here about 440 to 461. Those were targets on the way up. And again, this one from that divergent low back there was about a 241% rally. METC, this one I highlighted a couple things on it. We had a downtrend line back here, again when these were being highlighted last year, and an inverse head and shoulders pattern. That was your neckline right here. I don't know if you can see it in the video. Beautiful. Left shoulder, head, right shoulder. There was your breakout. Your breakout of the neckline, which again is a different line. This is the neckline down here. Oops, that's supposed to be it. Horizontal line. That was your neckline of the pattern, but you had another longer term trend line there, and what I liked about that one is they both broke out together, and it didn't just limp on through those levels. You had a powerful buy signal, big green candle right here, if I can box that in, and if you missed it, you got a chance on the back test of the neckline right there, and from that point, the breakout or the back test, it was about a 260% gainer. And again, that was then, this is now. Here's your uptrend line right there. Tweak it like that. Targets would be, I don't see any support on this one until at least right here. You have a couple reaction highs, 621. Look at that, started consolidating, high level consolidation, a big move down today, about 14%. Trapped all those longs that bought in recently, and there were quite a few of them, a lot of volume bars up there. And that would be if that target is hit, and it also comes in with that uptrend line, which I like as well. That is about a 17.5% drop, so that's how much more downside I see in this one before any tradable potential bounce. And it wouldn't surprise me if we slice right through there. Let me give you another target right here. I noticed right now, again, because these are old lines under the chart, we had a reaction high there, bunch of reactions there. So T1 621. T2 536, and that's METC. NRP, this one broke out. There was our downtrend line there. That's when the breakout occurred right here, and that one rallied from the breakout point about 87%, and another one that appears to me to have come full circle. There's our uptrend line. There's our divergence line right there, negative divergence on the RSI, actually all the way back from this point here. And this one's starting to crack. There's been a few, and here's another example. Just like today, remember on the markets, we were down below, just below support in pre-market, but then as soon as the market opened up, boom, the buyer stepped in, and that's why trading and that was a 60-minute chart, but on the daily time frame, this is why you want to wait. If you want to increase the odds, that is, you wait for a daily close. These little, what appear to be whipsaws, were technically they weren't sell signals, at least not on the daily time frame, because we moved below and we snapped back up to close back above the trend line both of those days. But today was different. That's a breakdown. There's a sell signal. So that one's an actual trade. I know I'm doing the video after hours, so basically wait till tomorrow morning, and as long as you don't open back above the trend line, you could short it in the morning if it doesn't get too far, if it doesn't gap down too much. And like anything, set your stops in line with what your price targets are. That's a minimum target right there, 1930, and from where we closed today, that's going to be about a 5% drop. And I would say, yeah, I like that line. Right about here would be your second target, 1719. So let's just focus on that now. If we get some more downside momentum to this, these trades, then I'll add additional targets. NC, and that's NACCO Industries, and there's your uptrend line. Big resistance right here it ran into. That was a target back then. Here was the setup last fall was right here. That bullish falling wedge. It was a beautiful wedge. Look at that divergence. Everything you want to see. Impulsive breakout. I mean, yeah, obviously you could tell from the number of posts I made back then. I really like these trades, and that one rallied right up to that 2550-ish target right there. Very brief overshoot for about a 60% gain. Pulled back, and so now what I have on it, it's failed there since. Another failure, another failure, another failure recently, so that's resistance. Obviously bullish if it can break it out with conviction and move on through that level, but unless it does, that's resistance. And with the lot of other stocks breaking down in the sector, we're probably going to come back down on this one, and at the very least revisit this uptrend line another time. And should we break that uptrend line, maybe even more. All right, so a couple more. And that would be AREC, American Resources. This one, I guess I covered it back then. A lot of those names I know by heart because I've been covering them for years, and I don't know why this chart's not marked up. So maybe it wasn't around back then, or I didn't cover it. But that was your divergent low. This one ran about almost 2,000%. That's over 1,900% from that divergent low last year. Don't have a strong opinion. It's in a downtrend. This one's kind of moving different from the herd, from the flock. I often say birds of feather flock together, and most of those stocks I just showed you are off or near 52-week highs, unlike this one, which peaked back earlier this year, and it's been in a downtrend, and that's really the only support line I have on there. So this one, like many coal companies, will probably go to the wayside, would be my guess ultimately. Oh, and there's a beautiful breakdown. I told you a minute ago there was only one. So we have at least, what is this? I think 3 so far that are broken down, and this is the last one that I'm going to cover. It's the last one in my coal watch list. There might have been some others. I'll revisit those old videos and let you know, but that's it. So let me tweak this trend line just a hair. It doesn't matter whether that's where I had it before. I'm going to put it right here. Either way you slice it or dice it, that is a beautiful setup, and I'm really upset I didn't have a price alert on that one. Look at that trend line. Look how many reactions. I can't count them. There's dozens of reactions. Well defined, and just a beautiful sell signal a couple weeks ago. Big red candle. Thing hasn't looked back. Had a little consolidation afterwards. Went on to hit what would have been my first target, must have been my upside target, 243 before from when it bottomed, and broke through that. Tried to back test it from below a couple times, couldn't get back above it, and has just rolled over. So this is what I think a lot of these other companies are going to do, especially if crude continues lower, and that's going to most likely be the case if this Delta variant doesn't slow down. I imagine quite a few of you listening to my voice have looked at the trends. depending on where you live. I have a friend who's a doctor in South Carolina. He just sent me a video from the chief medical officer of the hospital they did from a few days ago. They had, and this is a little podunk, smaller town in South Carolina. They had 0 patients from COVID in the hospital in June, and as of yesterday, when the video was done, I think it was yesterday or the day before. Oh gosh, whatever the numbers. I think it's like it's either high 20s or high 30s now admitted in the hospital for COVID. And more concerning, really, it's the trends. When you look at the trends and the spikes in many cities, there, the number of cases or people in the hospital now are higher than they were back when we had the flare-ups last year, last winter. And if you're wondering where my tangential brain is going, I mean, it's all relative because obviously, if this gets really bad or any worse, or continues at the trend it's at now, you're going to see more and more of an impact on crude oil. There's going to be less planes flying, less cruise ships going around. People start staying at home or staying indoors more. And don't underestimate if that happens, how fast and far crude oil can fall. Just look at where it was, the last time around. Now, I don't think we're going to get there. I hope we're not. But again, I'm just pointing out trades that have above average return potential, and like anything, goes both ways. So manage your risk, with stops if you take these guys, because when they turn and you get short covering rallies, even counter trend bounces. I mean, just look at the moves on the way up. If you rode out these pullbacks, that was 27%. This one right here from this high down was high to low was about 36%. And so it's important that I impress this upon you. You cannot successfully trend trade a stock like this if you have a very low tolerance for risk, or you like to use tight stops. You don't allow more than a 5, 8, 10% stop. Just find something else, because you'll just get stopped out in the daily grind. Now, how do you manage a position where you can tolerate a 20, 30% loss? Well, if your price target is 200-300%, let's say it's 300% and use a 30% stop loss. That's a 10-to-1 risk reward ratio. That's phenomenal. Usually a 3-to-1 is acceptable. And so, but how do you do that without your stomach sinking every time the stock drops, 10, 20%? You just take your position size down smaller. You don't need to put a lot of money. If you normally put $10,000 in a stock, and I've always said it with these, I take small amounts. I use a shotgun approach. I sprinkle little bits of cash. So if that's your number, whether it's 10,000 or 100,000, you might only put in 2 or 3,000 into a stock like this, especially because I don't believe there's an ETF anymore to trade these. So therefore, you want to be diversified. I showed you a lot of stocks last fall. And even before that, BTU is a good example. BTU was the last one to play out, and it had a big leg down before that. So had you picked BTU earlier in the year, you would have went really far underwater. A lot of the other stocks took off earlier in the year, and that's the benefit to diversification, because you never know which ones are going to be, or which one will be the biggest winner. And so that's why I like to, pretty much scatter about every company I just showed you. The ones that I like, I think there was only one in there I wasn't so crazy about the chart, and even then, who knows, that could be the big winner. So that's it, guys. This is the last one in the group I wanted to highlight. I need to give you targets here. This one, you could say the train has left the station. I mean, I think there's more downside to come, but that's, I like those other ones that are sitting right here right now, just above this trend line, because I think those stocks will look like this, if I'm right, in a few weeks or a couple months. And sometimes, you just have to be patient. Maybe these charts will play out, but maybe they're not going to play out for a while. Maybe a lot of those that I showed you that are above support will rally off there. I doubt it, because we already have several breaking down, and I think enough out of the dozen or so I just covered, with 3 or so already on sell signals, and the others looking, like it's imminent. I think it'll happen soon. But I'm going to wrap it up here, and again, I'll continue to update the sector as long as there's developments, and if these don't fizzle out, I'll continue to look for some other sectors and individual stocks with nice risk reward ratios. This has been Randy Finney with Right Side of the Chart. Have a great day.